Hello everyone, I am Anish from Analyst. Welcome back to our technical analysis series. In this video series, we will be exploring various techniques and indicators used in the field of technical analysis. Please do watch the entire video and do like and subscribe to the channel and hit the bell icon to get new video updates. To know about the hammer candlestick pattern and the other basics of stock market, watch my previous in the technical analysis category. In this video, we will discuss about the shooting star candlestick pattern and how it's work and the logic behind the shooting star candlestick pattern. Let's get into this in detail now.
Shooting star pattern is a single candlestick pattern which is used for a bearish reversal sign confirmation. The shooting star pattern have small body and a long upper wick, and these are the defining features. The upper wick of the shooting star is minimum twice the length of the body. Although the color of the body is not much significance, but the red body candle shows slightly more bearish implication than a green body. The shooting star candlestick pattern is a bearish reversal pattern that occurs after a uptrend. This animation clearly shows that how shooting star pattern works as a bearish reversal pattern in a downtrend, and it clearly shows the entry and the stop loss of a short side trade. If the price breaks below the low of a shooting star candle, the entry will get triggered and the stop loss will be high of the shooting star candle with some gap. Let's go to the chart for understanding the price action of a shooting star candlestick pattern and the logic behind the shooting star candlestick pattern.
Welcome back to the TradingView platform for understanding the shooting star pattern and the psychology behind the shooting star pattern. Let's go to chart. Just I am taking Nifty futures. Nifty futures, right? So first we have to understand the logic, that means the price action of a shooting star pattern, and then we can conclude the entry position, exit position and the stop loss begin the shooting star pattern. So first, just delete all the drawings. First we have to understand how the shooting star pattern is formed. And its structure is like this only. You can see there is a small lower body and the color will be red or green, anything, but the red color candle shows the more bearish implication. This is a red color candle and the wick. So if a green color shooting star means it's like this. This is how a shooting star pattern look like. So what is the logic behind the shooting star pattern? For an example, let's imagine 17,800 is a crucial resistance zone. It's a crucial resistance zone. The shooting star pattern is only used for identifying the bearish reversal confirmation only. It's not for taking any other entries or execution structure. It's only for a confirmation pattern. Only the shooting star pattern formed in a resistance level is a valid pattern. Other than in between, it's a pattern is forming in a trending market, but it's not valid. The pattern is only formed in a resistance level or in a supply zone is a valid pattern. Let's imagine 17,800 is a 17,000. Just draw it 17,800. 17,800. Let's imagine this is a crucial support resistance level. Just name it as a resistance. Center, and the color is also red. Okay, let's imagine 17,800 is a resistance level. So the price, we can expect the market nowadays, it's in a completely in a trending. The price is from 17,600 to 17,800 for our understanding. So in a resistance level, we can expect the market should be fall from the resistance level. In a resistance level, we can expect the market should be fall from the resistance level. For that resistance, we have just a confirmation. We need a confirmation to take our entry in a trade. So see here, if the market is open at this level, for an example, the market is open at the level of 17,760. For an example, 17,760. Market is open at 17,760. See here. and the price went up to 17,820. 17,820. It's any time frame. Maybe it's a daily time frame or a 15 minutes time frame or a hourly time frame, any kind of time frame. But we have to understand the logic only. The price is opened at the 17,760 level and it went up to 17,820. Before closing the candle, there is a sudden selling pressure coming from the level of 18,820, and again the price is fall from the 18,720 and it closes in a level of 17,730. Right, 17,730. So the candle opens at the 17,760 and it went up to 17,820. After that, there is a sudden selling pressure from the 17,720 level, 17,720 level, sorry, 820 level, and again the candle is closes below the opening price. It's clearly showing the price is getting rejection from the 17,800 level. That means some immediate sellers are taking the portion at the level of 17,820 level, and it clearly shows the reversal sign. After that, here our entry will be whenever the low of a shooting star pattern is broken, our entry will be triggered, and the high is our stop loss with some gap, and the stop loss is always with some gap. So this is how, this is our stop loss, and the target is the bottom level support is our target. Nearest bottom level support is our target. This is how the shooting star pattern works in a shooting star pattern work in a bearish reversal pattern in a trending market. The shooting star pattern only formed in a uptrend. That means it's in a uptrend is it's valid, and it's formed only in a key level. That means a resistance or in a supply zone is a high probability shooting star pattern. Let's check with some examples in Nifty future chart. So here I am not manually drawing any support and resistance. For that I am using the pivot points for identifying the support and resistance. You can see here the pivot points is already plotted. So let's move to 5 minutes time frame. So today's date is 13th of March, right? So here resistance ones is around 17,556 level. So here the market is, see the price action of the candles. Here you can see the market is open in the level of 17,549 level. After that it went and closed up to 17,560 level, and the next candle is also a bearish candle. After that the market is open at this level. It went up to our previous candle above our previous candle high, and after that there is a sudden selling pressure from the level of 17,574 level, and it closes below the opening price. It's a clearly reversal pattern. So here we can take our entry. Here we can take our entry, short position. Stop loss is above the candle with some gap, high of the candle with some gap, and the target will be our next level support, resistance, or a pivot. And again you can see. So in R1 also just shifting our time frame to 3 minutes. Here also we can see some patterns. 3 minute or in a 1 minute also we can identify some patterns. In a 1 minute time frame, you can see it's a R1 resistance one. Clearly you can see it's a shooting star pattern, and at the level of R1 resistance level. So here our execution will be here. Short position, low of the candle, and the stop loss will be high of the candle with some gap. It's only valid in the levels, that means in a resistance level or in a supply zones. So first target will be around here, second target will be around here. You can see easily our targets are achieved. This is how the shooting star pattern worked in a market. It can work in any hazards, that means in a crude oil you can work, in a currency market you can work, in a stocks you can work, or in a index market you can work with this part of confirmation. Hope you all understand and like this video about shooting star candlestick pattern and the logic behind the shooting star candlestick pattern. To know about the hammer candlestick pattern and the other basics of stock market, watch my previous in the technical analysis category. See you in the next video with another interesting technical analysis concept. Until then, subscribe to our channel and hit the bell icon to get new video updates. This is Anish signing off.
Investment in securities markets are subject to market risks. Read all the related documents carefully before investing.